Money day, guys and girls. Welcome back to another episode of Market Mondays. You're locked in and you're learning with Vel. Now, this episode is going to be very special. Reason being, it's the first episode of 2025, but there's also a lot of high impact news taking place throughout this week. Now, we're going to cover in this video today the importance of understanding what interest rates can do to the market and how we can trade around those high impact news events safely. And we're also going to have a look at what news impacts the markets the most. Okay, so we've got the Federal Reserve, we've got the European Central Bank, we've got the Canadian Central Bank. We've got a lot of things happening this week. So of course, as always, I'm going to be sharing with you guys the technical analysis, combining it with the economical fundamental aspects that are going to help us navigate throughout the market safely. So if you've got this far into the video, as always, be sure if you haven't already to like the video. If you like it, subscribe. If you haven't already, what are you playing at, man? How are you here and you ain't subscribed to the channel? You're playing games. So yeah, no further ado, guys, let's get into this. Okay, so the very first thing we want to do is have a look at the economic calendar, and we can see what's taking place throughout the week. Now, on Monday, it's a bit quiet. Tuesday, it's also a bit quiet. But Wednesday we start warming up. Yeah, Wednesday, we start to really get to that juicy bag. So on Wednesday, we've got the European press conference. So President Lagarde, she's going to come out speaking her stuff in anticipation for the interest rate that will be released on Thursday. But we've also got the Bank of Canada's interest rate decision, and we've also got the Federal Reserve, okay, Jerome Powell. Now, this is really important right now because we've got a battle of the powers. We've got a battle of the Fed versus Donald Trump. Who's going to be the one that's more dominant? Is it going to be Donald Trump? Is it going to be the Fed? Now, of course, a lot of you may know that the Federal Reserve, they play their own game. They don't listen to what Trump says. They don't take orders from Trump. They don't take orders from the president, right? But, you know, with, what's his name? Joe Biden inside the White House, maybe there wasn't really too much of an agreement that they could have because he didn't know what he was saying anyway. But with Donald Trump, he's very assertive. He's very dominant. He's very assertive, and he's very dominative. Is it dominative? Dominant. What am I talking about? He's very dominant. He's very dominant. He's very dominant, okay, with his presence. And, you know, he's a very shrewd, smart, savvy business investor. So essentially, there's a lot more that Trump could probably have to say and implement in towards maybe the Fed's policies or tariffs that he may change in light of making the dollar stronger or weaker. Okay, so with that being said, the interest rate and the Federal Reserve, the Federal press conference, this is going to be an important one. Okay, so as we go into Thursday, we've got the interest rate for the euro. We've got GDP for Germany. Germany is the second, the biggest. Okay, it's the largest economy inside of the eurozone. So if the German economy, I don't know why I can't get my words out right, but if the German economy doesn't perform well, then that's usually a telltale indicator that the European community, the ECB results are also going to be matching what the German results do match, okay, the German GDP. So we've also got initial jobless claims for the dollar. We can see here on Thursday. So Thursday is also another, you know, it's a crazy week, guys. It's a crazy week. You know, Friday is a bit more calmer. We've only got CPI. For the we've got CPI and PMI, right? CPI for the euro. But what's also interesting is the tech sector, guys. I don't know why I can't get my words out. I'm really sorry. But the technology sector, okay, they've also got some big reports, big earnings that they're going to be releasing on Wednesday. So the tech sector is also going to be something under scrutiny. Obviously, as we know right now, based on what Trump has done when he's come into the White House, what he's done is he's actually put us in a position where we understand that he's been backing the technology sector. That's what he's done for us. He's made it clear for us, yo, I'm back in the technology sector. I'm getting behind AI. I'm creating this new fund for AI. He's really looking towards supporting the AI industry. And of course, you know, his right-hand man is Elon Musk. So it's going to be very interesting to see exactly how the stock market responds, quite simply. Okay, how is the stock market going to respond this week? And also what's going to happen to the dollar? You know, are these guys trying to crash the dollar because they've also been talking a lot about crypto? Is Trump going to be the guy that crashes the US dollar and brings through cryptocurrency, stable coins? Is he going to be the guy? Let me know in the comment section what you guys think. But ultimately, of course, for us, all we can do is read articles, you know, do our research and really just make an observation of what's happening as opposed to trying to foresee something happening. So I want to bring you guys attention. I want to bring your attention to finviz.com. This is the website I use for financial news, guys. It shows me all the latest news updates coming from Reuters, Bloomberg, is that Watchdog, Yahoo Finance, Wall Street Journal, you name it. The articles are printed here. The Telegraph, it's got every financial outlet that provide information regarding the markets. It gets released here. So it really does help me keep up to date with what's happening. This is not a sponsored ad, but what it does do, of course, is it helps me obtain information that I need in order for me to understand why or when the markets may decide to change. Okay. So I'm going to show you guys this article here because I think this article is really important. On Wednesday afternoon, the Federal Reserve will announce its latest monetary policy decision, with the central bank expected to keep interest rates unchanged and investors focused on what Fed Jerome Powell has to say about the balance of 2025. I just made 16K and that is what I call a money day. If you want to be able to shout money day too, then Star Trader is the app for you. Star Trader will be giving you a 70% credit bonus, guys, when you deposit over $1,000. To get the deposit bonus, all you simply have to do is scan the QR code, which you can see somewhere on the screen, or click the link in the bio below. Once you've done that, Star Trader offers you thousands of different instruments to be able to trade. Of course, a copy trading app, which means you guys can find me on there and copy my trades too, so that you guys can be screaming money day in blue. Now, look, okay, 4 days into Trump's 2.0, Trump 2.0, that's funny. For those of you who are too young to know, Trump was also the president before, several years ago. Now he's back, right? But it's been clear that the new president is in the driver's seat of the stock market. On Tuesday, markets rallied as the dollar fell after Trump held back from firing off the barrage of universal tariff hikes, some expected on his first day in office. Now, I don't need to go too deep into this article, guys, but what I did want to show you guys is right here. On Wednesday, Trump sparked an AI rally after he announced a new $500 billion private sector investment dubbed Stargate. Now, for those of you who have seen that TV show Stargate Atlantis, this is sounding a bit samey. Let me know in the comment section if you guys know about Stargate, man. My dad used to watch that show all the time, so I know about Stargate, sci-fi. Stargate? Pretty sure it's called Stargate. So yeah, to build artificial intelligence infrastructure in the United States with Oracle, ChatGPT, and Creator OpenAI. Listen, guys. What we're seeing here is we're at the forefront of a shift in technology. We're at the forefront of a shift in information being withheld to now being online, to now being easily accessible. There are so much things happening, guys, which is the reason why I told y'all, buy Nvidia. I told y'all that, buy Nvidia. I don't know why I'm getting into America now, because I really want to start swearing, but I ain't gonna swear, okay? But I told y'all, yeah, to buy Nvidia. That's what I said. I said buy Nvidia, and we bought in. We're gonna have a look at the stocks here I was doing. A shout out to those inside of the community, where of course we bought Nvidia and we're now riding high. But again, even if you're watching this video, it's important for you to understand that no matter where price is right now, Nvidia will always be a good investment. Okay, once upon a time, people looked at Bitcoin and they said, oh, it's at 7,000, it's too far, it's too high, it's not worth it. And now look where Bitcoin is. Bitcoin's trading above $100,000. The same thing with XRP. People are saying, oh, it's above £3 now, it's above $3, it's not worth it. But in 5 years' time, if XRP is trading at over $100 a coin, what are you going to say about not getting in at $3 a coin? Do you understand? So we have to really be honest with ourselves and think about our investment strategy. A lot of you are investing to get rich overnight. That's the reason why you won't invest into these assets. A lot of you are thinking too pernickety, right? You're trying to be too precise. You're holding back from investing into things because you want the price to be cheaper. Don't get me wrong, everyone likes a bargain, but you have to understand good business. You have to understand if you're backing an asset for its longevity purposes, or if you're backing an asset for it to run a race and make you some money. Whichever one you're going for, you need to have an investment strategy based off of what you're looking for, right? So disclaimer, anything I give to you guys in this video is not financial advice. I am not a financial advisor. I'm just a guy in a white shirt and a white hat, some cool shades, trying to tell you guys what I'm looking at for the markets. So with that being said, I think we should head over to the DXY. Let's have a look and see what we think may happen throughout the week. Now look, the dollar, as we know, okay, has been in a really bad place. I say it's been in a bad place because it hasn't put us in a position where there's been any clarity since really 2022, okay? But we haven't really left this range, guys, for the whole of 2023 at least, okay? And towards the end of 22, we just stayed inside of this range and we never went anywhere. Some could say it was the Joe Biden effect, right? But now that Trump's in the office, I'm pretty sure we're either going to have one or two things happen, right? We're going to see this high taken out, or we're going to see this low taken. Donald Trump is not going to have the dollar just fraffing about. He's going to be making some moves because he wants to make that money. Yeah, comment in the video section below. Comment in the section below, money. Okay, I'm going to give out $300 to someone who comments money. But you got to be subscribed to my channel, and you also have to be following my Instagram account, which is litcap_vel, in order for me to be able to message you and give you your $100. Okay, but again, why I'm saying this is because it's really important to understand that Trump is going to move the markets. Okay, when Trump speaks, the markets move. He's been back in the technology sector. We've got a massive week, especially on Wednesday, when a lot of the huge tech companies release their earning reports. So, you know, the dollar could take a dive. I mean, look, one thing that I really want to go over, which is the basics here, okay, is the interest rates, right? What do interest rates mean for us, and how can they affect our trades? Well, the interest rates are connected to bonds, okay? So if bond prices goes up, that means interest rates have gone down. Now, if you have a look at the economic calendar, you can see here it says that they intend on the interest rate remaining the same for the United States. However, last week for the Bank of Japan, they decreased the interest rate. This week coming up, analysts believe that the Bank of Canada will also decrease their interest rate. So I'm pretty certain that the United States are also going to decrease the interest rate. It also has here for the euro. The euro also believe, the analysts forecast, that they will decrease their interest rate. So if everyone's making rate cuts, why on earth would the dollar stay the same? I don't see why the dollar would stay the same at all. So based off of that being said, of course, that would give us a slight indication to understanding, going back over to here, if bond prices go up, that means interest rates have gone down. So if we go into the chart here and we understand interest rates going down would result in bond prices going up, okay? At the moment, when we have a look at this chart here, what we can see is we've actually had a really nice pullback into this 79, which I like to call the sweet spot. We had that sweet spot pullback, price pushed up, we didn't make a new high, came back down, but we did push up again, and we just made another equal high. So there's effectively quite a lot of liquidity in this area above. We haven't made any new lows, which is also quite positive. This low hasn't been taken out. So on the line graph, of course, although we've had, you know, highs in here and lows in here, if we look at this from a real structural perspective, we've had this low, this low, this low. They're all higher lows, or this one here, sorry, higher low, higher low, higher low. This here could be the higher low because this is the equal low. Price could push up, guys, okay? It could push up to make a new high. I'm not saying it's going to do that based off of one news report or one rate hike or one rate decrease, okay? But effectively, we are going to see a lot of volume. Over the next coming months, the next year or two, we're going to see a lot of volume, a lot of things happening, a lot of markets going, a lot of shifts are going to take place. I believe the power shift is going to change, and in order for that to change, news events like what we're seeing today are going to have or news events like what we're going to see take place throughout this week are going to have a very important part to play. So although you may not understand about, you know, interest rates or about how the micro or even macroeconomics affect the markets, these are things to just listen to, because as time plays on, these things will start to make sense. You know, like when you always hang around someone and you're hearing them talking about their business, which let's say they learn how to, that someone's got a business on making cakes, right? If you stay around that person long enough, eventually you're going to know how to make a cake based off of what you're always hearing. So it's the same thing, the same similar concept, even if you don't, the hell was that? It was a bang. Yeah, so even if you don't know exactly what you guys are doing, it's going to be really important for you guys to just pick up what things are being, just pick up what's being said, so that you guys can, of course, add this to the markets moving forward, add this to your analysis. So I'm going to be keeping my eyes very closely glued to how the bond market's going to respond throughout the week, because I'm not saying to you guys right now that I believe it's going to push up, and I'm not saying that it's going to come down. Based off of what history, based off what history shows us, and this is what we all need to understand here, is that if the interest rates go down, the bond price will go up. That's what history shows us, guys. So based off of that, we should expect to see some more bullish price action here with bonds. We should expect to see more people purchasing bonds. So if we see that, that is also going to push the strength of the dollar up as well. Okay, the dollar should rise with the bond prices. If bond prices push up, then we could have a slight delay of maybe a day or two behind, but the dollar should also follow the bonds. Okay, and when we look at the bond yields, okay, the bond yields are connected to interest rates. The bond yields are connected to interest rates and inflation. Okay, so a message here: yields are connected to inflation and interest rates. If they go up, so does the yields. Okay, if they go up, that means the yields rise with it. Okay, so this is inverse to the bonds. Okay, it's inverse to the interest rates connected to the bonds, the treasury bonds. Okay, before what we read, we can see it here. Where are we? We can see it here. If bond prices goes up, that means interest rates have gone down. Okay, and if that happens, then this would be the complete opposite. Okay, so if the bond prices go up, then that means that bond yields would come down. Okay, but ultimately here we can see, if inflation and interest rates go down, then that means this will go with it. So it is expected, based off of what we're seeing here, that look, for the euro, for the Canadian dollar, and for the Japanese yen last week, they all reduced their interest rates. So I don't see why the dollar wouldn't do the same. But we just have to, of course, keep our eyes peeled and glued to see what's happening. Okay, so I'm gonna go over Euro USD now. What's interesting with Euro USD, for those of you who probably don't look at the EXY, this is the Euro currency index. This is a spitting image of Euro USD, right? It's a spitting image of Euro USD. Okay, and looking at Euro USD, we have been inside quite a bearish range for a number of years, right? No one can deny that. But at the same time, we've also seen, some bullish action taking place, which can potentially put us in a better situation. The reason why I say this is because the dollar has to make a move. If the dollar comes down, which is a huge possibility, because Trump is back in the tech sector. Trump wants the stock market to push. If the stock market's going to pump, then I don't believe the dollar will also do the same with it. Now, what's really interesting is, back in the day when the stock market used to go up, gold used to come down. And these things were very clear for traders to be able to capitalize on. Ever since, maybe the last 6 years, 5 years, since lockdown, you could say, things started being a bit post-lockdown. The market started being a bit, there was a lot of divergence. There's a lot of things that weren't making sense. So I'm hoping that now that Trump's back in the seat, he's going to iron out a few errors, and the markets can get back to moving how they would usually move, because it made it a lot easier for us to trade. In times of economic uncertainty, commodities are meant to do very well, right? But we've seen times where, I'm sure you guys should all know, if the DXY goes up, that means gold should come down. But there's a lot of times now where gold is going up and so is the DXY going up. So there is a lot of, divergence. There's a lot of mass manipulation taking place, which is affecting the outcome of the basic fundamentals that should be taking place in the market, which is the reason why we need to remain patient, and we also need to exercise caution. Okay, my 3 P's: being patient leads to you being more profitable, and it leads to you having much more perseverance. Okay, or should I say, really, by persevering and by being patient, you end up being more profitable. The 3 P's. Okay. Now look, I want prices to push up higher. Ultimately, we do have a nice fib here from the 62% where price has reacted from it so far. In order for me to go long on this, I would like I would like Euro USD to come down before we get a buy outwards. It's similar to GBP USD. It's actually moved off of my LWV candle, which is great because price has pushed up. But again, we need a retest, guys. We need a retest. Right now, if we go on the weekly chart here, we can see we haven't taken out this low, which is great, but we also have come to a significant structural level here. So what are we doing? Are we making lower lows, lower highs to make a new lower low here, to make a lower high here to make a new lower low? Is that what we're doing? Because if that is the case, if this is what we're doing, coming up to come down, then it simply means that it's going to be best if we sit on the sidelines rather than trying to foresee something happening. There's a lot of news taking place, guys. You know, there's a lot of pairs that we probably don't even need to trade. Okay, I'm going to share with you guys AUD USD. Now, the upside potential on AU is around 1600 pips. I'm not saying price is going to do that, but I am saying we are inside of areas where, look, man, the liquidity is above. The market's always going to go where the money is. Where's the man yang? If you guys have seen any of my videos, go back to the first video in the LWV Academy. Where's the money? Where is the man yang? Okay, that video helps you understand that liquidity is what drives the markets. If there's more liquidity above, the markets are going to go above to grab it and then go the other way. Okay, so effectively all we can do is just highlight the areas of liquidity and be patient to see what the markets decide to do. We're not trying to foresee this and say, hey, buy it now up into that high. No, but for those of you that like to swing trade like myself, you will know based off of what the rates are going to show us, we're going to be able to hold some really nice positions. This is the chance for you guys to get involved in my community by going into the bio, clicking the link so you guys can follow the channels and join the free community, guys. Join the free community. I provide more trades, more outlooks like this, more private calls for the team, for those who actually care about bettering their trading ability. So yeah, AUD USD, that's done. I'm going to show you guys Euro AUD. Now, I sent out a sell for this trade here. I've been in the sell for quite some time, okay? Really and truly, I'm probably going to close this because it's been quite boring or been quite rubbish. But with that being said, I just want to show you guys something. This area has been an area that I've shorted from countless number of times, okay? So the fact that we have just kind of ranged inside of this area, you know, since the start of the month, to be honest with you, it's kind of given me some type of assurance that something is about to happen. Whenever we see the markets consolidating, it's a huge indication that the market's about to gear up for something. So I'll probably close this. This is the swing trade that I'm trying to hold. We're going to see how it plays out. If we win it, we win it. If we don't, we don't. But it is kind of boring me, if I'm honest with you guys. And Euro JPY. Okay, Euro JPY was a really profitable swing that we had to the downside. I sent this out inside the Discord for free. So I hope you guys caught that trade. If you didn't, then be sure to follow the channels below in the comment section, in the description box, excuse me, so that you guys don't miss out on trades like this. Euro JPY, okay, this is purely based off of the JPY strength. Okay, if the JPY strength is going to go up, this is going to be impacted. Okay, if the Japanese yen gets stronger, this is going to come down. Right now, when we look at this on a weekly, on the line graph, we can see here that we had a higher high, higher low, higher high, higher low. What are we doing now? What are we doing now? Now it looks like we're pivoting, but at the end of the day, the week's just about to start, guys. So we're going to be we're not going to be biased and no, we're not leaving no page. We're not going to be biased and say the markets are going to be bearish or bullish, because right now, if we looked at this cliff that it fell off of, it made it bearish, right? It did. It made the markets bearish. But since then, we've just been ranging higher, higher low. We haven't yet made a higher high. We haven't yet made a higher high, so this isn't a higher low. So we do have to be careful with what the markets are doing right now, because the picture isn't entirely clear. On the smaller time frames, on the 4 and the 2 hour time frames, of course, we can see that we are bullish, right? So we do want to pull back maybe into this order block in order for us to continue going higher. The buy side liquidity, guys, 165. This will be hit this week. 165. I see the euro pushing higher. They're going to reduce the interest rate. They're probably going to have a little bullish run as they're taking place on Thursday. The euro always releases their interest rate on Thursday. I do think that we can get higher prices with this. The Japanese yen, they released their interest rate last week, and when they done that, the coin, they became weaker. With them becoming weaker, the euro actually started to accelerate. So let's see what happens. I want you to comment in the video, comment in the section below your thoughts on what you think may happen. If you guys are more technical than fundamental based traders, that's okay. I'm going to be updating you guys every single day this week inside my Discord. Okay, I've got a copy trader, which you guys, most of you guys that are watching this video should know about. But if you don't know about, well, then the copy trader makes trading for you 10 times easier with my expert experience. And with my cutting edge AI technology, it simply places the trade so that you guys don't have to worry about catching a trade or missing that trade. So I'm going to end today's video just like this. If you're watching and you haven't subscribed already, you're reckless, man. Shame on you. But most importantly, if you're here and you've been here, I really appreciate you guys for tuning in every single time. I've been your host. You've been learning with Vel. Always remember that every day is money day. Peace.